Hey everyone, the Chinese company home to widely popular Temu is scheduled to report fiscal 2024 first quarter earnings on Wednesday, May 22nd. So a lot of investors are asking if they should buy this stock before the company announces earnings. So I'll review the company's latest results. I'll also look at its longer term results on revenue and profitability. And then I'll look at its valuation, and then I'll answer whether or not investors should buy this stock before earnings, after earnings, or maybe not buy this stock at all. So let's take a look at these interesting numbers. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now. All right, so Pinduoduo reported some phenomenal growth numbers in its latest quarter. In the latest quarter, which they reported on March 20th, they said that revenue increased by a whopping 123% year over year. Similarly, operating profit increased by an incredible 146% year over year. The company's home to Temu, which has been widely popular and gaining significant market share in the US. Latest reports suggested that it had an over 20% market share on online retail in the latest quarter. Now, its products offered are significantly cheaper than you can find anywhere else, including Amazon. In one example, I purchased an Apple Pencil or a replica of an Apple Pencil for less than $10 on Temu. I think it was $7 actually. And that same Apple Pencil I found on Amazon was selling at roughly $21. So at 1/3 the price that it was on Amazon. Now, the one difference is, of course, that ordering from Temu, I got the item. I think it took over a week and a half to receive the item, whereas on Amazon, I would have gotten it on the next day or the day after. But on products like that, where I already had one and I was just buying my second or third one actually, because I have multiple iPads, and I didn't mind waiting a couple of extra days if I was going to get the item at a fraction of the price that I could get it on Amazon. And so therein lies an advantage for Temu to gain market share across several markets against Amazon, against other retailers, because it offers products at significantly lower prices if customers are willing to wait a little bit longer to receive those products. And I also noticed the return policy is very customer friendly. I was able to initiate a return and get the refund right there on the app. I didn't even have to send back the product. They just refunded me on one of the items that came damaged in the delivery. So the offering itself is attractive to customers, and you can understand why they've been gaining significant market share in the US and other markets. Now, they're not going to crush Amazon completely. They're good on certain products that customers do not mind waiting longer times for, and certain products that they can offer at much lower valuations because they cut out the middleman. They cut out that drop shipper, you can call that merchant that gets the item from the manufacturer in China and then lists it on Amazon at a premium price and then makes the difference. Now, Temu can offer just direct access to that manufacturer, which can sell it on Temu at a lower price. So longer term, it can significantly increase, although there is the risk, right, of the US government, again, clamping down on Chinese-owned companies. You saw that with TikTok, that is now getting forced to divest itself or be excluded from the US market because of government action. If Temu continues, it's already seeing some pressure from US government regulators who are trying to clamp down on some of its practices. If it continues gaining popularity, it wouldn't surprise me if the US government again tries to clamp down on this company and restrict its growth. So there is that big risk there for Pinduoduo and its Temu business. Now, longer term, you can see the company's exponential revenue growth here. Look at that significant growth up to 34.8 billion, up from less than 1 billion in 2018. Phenomenal growth here for Pinduoduo Holdings. And they've been growing while expanding the operating profit margin, 23.67% in operating profit margin, up from negative levels in 2018, 2019, 2020. So they've been reaching here economies in scale to expand the operating profit margin. Really interesting here, especially considering that the valuation trading at a forward price to earnings of 13.33. Now, it's a little more expensive than some of these other Chinese stocks that are also demonstrating nice growth, although nowhere near this level of growth. Nice growth and profitability, trading at around, a forward price to earnings of 8 or 9 or even 7. Companies like Alibaba, I forget the other one, Baidu, that I recently covered as well, trading at forward price to earnings of less than 10. Pinduoduo, a little bit more expensive at 13.33, but still cheap when you compare it to US-based companies with similar aspects and similar growth. But at the same time, there is a lot more risk associated with Pinduoduo than you have with many other US-based companies. And so that risk requires a discounted valuation to account for that risk. Now, I highlighted the company is scheduled to report quarterly earnings results on May 22nd. And let me make this bigger so you can see it. And investors want to know, should they buy it before or after, or should not buy it at all? And given the elevated risk of Pinduoduo, I would say this is one of those situations where let's wait to see what the company announces in the earnings results. Let's wait to see the information we get regarding some of those geopolitical risks, and let's see the development of the business. Now, Pinduoduo has been noted for providing limited disclosure to investors, and that lack of transparency is another layer of risk associated with Pinduoduo. So, given all of those risks, I would wait to see the announcement. Let's get the numbers, let's digest the information. Let's not fall prey to the fear of missing out here. I'd always rather avoid taking a loss instead of fearing missing out on a gain. That's my preference. My investing preference has always been that. And that preference has helped me avoid many such disasters. So I'll take a cautious approach here, and I'll suggest waiting, digesting the new information that comes out, and then reevaluating Pinduoduo stock after it announces these numbers. Before I let you go, let me tell you about the greatest deal on YouTube. With just a click of a button, you can get free financial analysis from a professor with decades of investing experience. So what are you waiting for? Hit that subscribe button, and I'll see you again soon.